You're watching the Mortgage Busters and Investment Show, and you know this show is all about paying off your mortgage as fast as possible, but also preparing for retirement, and that probably means you have to invest. Adrian,
that was my bit.
No, well, you can say it again. Say it again.
Yes, correct. The free Bust Your Mortgage report now.
Yes, doesn't that sound fantastic? Bust your mortgage
report.
Isn't that much better than the thumbprint report?
It took us 4 years.
I know. Bust your mortgage. So how do people get this?
Well, they just have to give us a call or go to their website, 1300 TMB show, or go to the website www.tmbshow.com.au.
tmbshow.com.au, which is the Mortgage Busters and Investment Show.
That's right. Anyway,
right.
They can analyse all their information and see what they can do
Absolutely.
in the future.
We've got Justine
we do.
back from
Smart Trading.
Smart Trading. Fantastic. Justine, last week was fantastic. We've had a sensational response to your program, and welcome back.
Thank you for having me back.
Yeah, absolutely.
So we didn't get a chance to finish these books. We didn't even get a chance to start them. So you're in the $1 million millionaire. Hang on, what is it? Mrs. Millionaire.
Yes.
Miss Millionaire.
Yeah,
correct?
I've got a chapter in that book which is all about my
That's
life
pretty
story
fantastic.
and
There's
how
a lot
I
of
got to where I am today.
a lot of woman power there.
Well, there is a
There's
Mr. Millionaire as well. There's a whole series
Oh,
of them.
okay.
There's some famous women here. Where can people get a copy of this?
You can buy it online. I've actually got an ebook that you can buy off my website. So smarttrading.com.au.
So that'll be down the
you
bottom
can buy
of the
digital version of it.
Yep.
You can also buy my book Smart Trading Plans from my website too.
Yes, that's the other one. The other smart.
So that's all about writing a trading plan for the stock market, because one thing that people, they want to invest in the stock market and maybe they just invest because someone tells them to go and buy something. I mean, that's how I started.
Yeah, of course.
But you soon realise, you've only got to go through a GFC. If you don't have a strategy, you soon realise that something has to change. And with my experience that I talked about last episode with the World Trade Center crash, I was completely set up for the GFC. So before the GFC came, we had a beautiful
the
bull
global
market.
financial crisis.
That's right. So 2003 to 2007 was a beautiful bull market, and I was completely invested.
Sorry, what's bull? Because people don't know what a bull is.
Bull is a rising market. Everything's going up, and you're making money, and everything's great. But things can change.
And what do they call that? Crap?
A bear market. And that's what happened in 2008.
Yep.
And for those that didn't have a strategy or an exit strategy, they were the ones that were caught out through that. And you had shares that halved in value. You had shares that disappeared off the stock market. So I was invested with both my trading systems, completely invested with my long-term, which I call my weekly trading system, which I purely trade shares with. And then I've got my swing trading system, which I trade contracts for difference with, which we touched on last episode. And then 2007, I started to get some of my stop losses, which are my exits, because what happens when I trade is I have a trailing exit point, and as a share goes my way.
So just
Explain that one.
just for the viewers, stop loss. What is a stop loss?
Okay, a stop loss basically is my survival in the market.
So we're talking about trading shares, like the average normal share like Telstra or something like that.
So a diver wouldn't dive, without their oxygen pack.
That's good.
Really?
That's a great analogy,
so to speak. So this is how I survived and profited during the global financial crisis.
Yeah, right.
So I have that set up online. You can set up your exits with your brokers online. You couldn't do it in the early days, but you can do it these days. And when I enter or buy a share of any kind, whether a contract for difference or a share, I always know where my exit point is, and I assess my risk and it's set accordingly, and that's all off the charts.
So just to reiterate from specifically in the last show, right? The average Joe that wants to do a trade, or buy a couple of shares or just give it a go, what would you recommend for them?
Well, because I'm purely a chartist and look at charts, I like to show people what a healthy share looks like and how to identify when that share becomes unhealthy.
Because that's great language. I love the way you describe that.
Yeah.
Let's show one of those charts, actually.
Okay. So and that's what's happened with the global financial crisis. Everything became unhealthy, and my exits were all hit, and I had nothing left open in the stock market. And I sat in cash with my long-term system for 1.5 years before I got signals to re-enter. But in the meantime, because I trade contracts for difference, I know how to make money on falling shares through a strategy called short selling, where you actually sell with the goal of buying back at a lower price and making money. But
So you can actually, you've got to, most people know for shares, right? They buy a share hoping that it's going to go up. But most people don't know that you can actually buy, you can trade shares so that you can make money on the way down. Can you explain that for the viewer?
Yeah, so why don't we bring up, I've got a chart of the 4 market stages.
Fantastic.
So if we bring that up onto the screen now,
Yeah.
and I'll explain, these are on average what most shares will move through during their lifetime, or they'll move through it a couple of times. So usually what happens is a share will be in a basing pattern at some stage. Basing patterns is where a share is going sideways, and I call it a stage 1 base. And it usually is zigzagging around. So you'll see on the chart there's a line on there, and that's what's called a moving average. And that's a 30-week moving average on a weekly chart. And if that line is mostly flat, and then you'll have these other things, which I call candlesticks, which are the price bars, zigzagging above and below it, the share's consolidating and going sideways. Now, at some stage, it's going to break up
out.
or break down. And if it breaks up and makes a new high out of that trading range, some people call them boxes, some people call them trading ranges, that's when I want to get into it. And that's usually the start of a stage 2 uptrend.
So why does that happen?
Or a downtrend.
No, it's going
No?
to break down for a downtrend.
Yeah, that's
So-
what I meant. If it's,
So we'll just focus on the
Yeah, okay.
uptrend. And so it breaks out into the uptrend. What's happening now is the buyers are behind this share. They want to own it. And if people want to own it, I want to own it.
And then the
It's
more
just-
people that hear about it, they want to they want to buy more, and it just escalates.
So you've got more buyers in the market than sellers. Supply and demand.
Yeah, correct.
So, the demand's strong, and that forces the price to go up. It's not going to go up straight away. It's going to go up, it's going to go down, it's going to zigzag up and down. But you'll see on that chart there's a line underneath, and it's rising. And while that 30-week moving average line is rising and those candlesticks or the price bars are above it, that's a healthy
We've got about 1 minute
share.
before the break. But you've used a lot of terminology there, and it's probably above most people for the average novice person that's wanting to have a look at trading. Right?
Google the words.
But I guess
Well, I have a course that helps people understand.
which we'll promote at the end of the show. Yeah, which is fantastic. But basically, it's common sense at the same time, isn't it?
Well,
Yeah.
like I said, I can see the health of a share through the chart, and if those candlesticks are going up and they're above that moving average line,
Yeah.
that's healthy. And we'll talk about the stage 3 top
Makes
and when it
sense.
becomes unhealthy after the break.
She explains it quite well.
I know. Yeah, very good.
Even I understood it.
So you're watching the Mortgage Busters and Investment Show, and we'll be back with Justine directly after the break. You're back with the Mortgage Busters and Investment Show. Justine, we were talking about healthy shares. Or what makes a share healthy?
Well, we had that chart of the 4 market stages. So for me, just looking at the chart is how I know if it's healthy. And if those price bars on the chart are rising and the share is basically making higher highs, so every time it moves higher, it's higher than it's previously been in the past. And when it falls back, and they'll have pivot points, they'll fall back and pivot and then they'll move up again. And those pivot points will be higher than the last pivot point. You have a healthy uptrending share. But at some point, that's
So in other words,
going to
it
end.
needs to breathe. Yeah? Okay.
But what about the ones that go,
Yeah, that's what happens. So that's why you have an exit strategy. And when I look at charts, I'll have an exit strategy and I want to be out of it before it goes, so to speak.
which we've seen.
So I want to ride it while it goes, but
Yeah.
I'm never going to be out at the top and in at the bottom. I want the chunk in the middle.
Can I
want
just
that
ask
chunk
you
in the
something
middle.
interesting I wanted to know? Where's the biggest wins, on the downs or on the ups?
On the ups, because on the ups things can double and triple in price.
Really? Not
on
the-
the
not
downs,
on the
they
downs?
can't double and triple. They can't go beyond zero.
Okay.
So something, you can see shares that have gone up beyond $100 before. You have a $5 stock, going down, it can't go beyond zero, but it can go to $10, $15, $25.
I never really thought of it that way. It makes so much sense. So true.
Very true.
I used to like the downs until now.
Well, I do like trading down as well,
Yeah.
but overall, I have my biggest wins on the ups. So, because there's more potential on the ups. When the market's
Makes sense.
healthy, there's more potential on the ups.
Very
If it's
logical.
unhealthy, there's not more potential on the ups. So what happened with the GFC is the market got to a certain point,
Exploded.
And obviously there's a whole lot of things going on in the background, but when people lose confidence in the share market and no longer want to be a buyer and they start selling, that's when you either see the market start going down. It may hit this topping phase where it might become choppy for a while, but it's not making any new highs. And that's what we call a stage 3 top. That can be very short-lived, could be a couple of weeks, could be a couple of months. But once it starts making new lows, and you'll see on that market stage chart, that line is now falling, that moving average line is falling, and the share price is predominantly below it, that's your stage 4 downtrend. I'm not going to be a buyer of a share in a stage 4 downtrend. Then eventually it gets down to a certain point where people feel there's value in the stock again and they want to start buying it again. Sometimes stocks don't, they just disappear off the stock market. That's happened. I can show you a chart of Babcock Brown or ABC Learning Centres, if we'll bring up one of those charts.
Oh, yeah.
And you can see how those shares were healthy, you can see where they stalled, you can see where they become unhealthy.
Their demise was not just the stock, it was everything, wasn't it?
Sorry, what was that?
Their demise was a lot of things, wasn't it?
Or was there an agenda?
Oh, I don't know.
Too hard.
For me, I don't get stuck into the agenda or the reasons why things happen.
That's fundamental.
I'm purely following the charts, and it's just a 3-letter code is what I'm trading. I don't emotionally get involved with the company.
That's very
Fundamentally,
important.
you get emotionally involved. I just have a strategy where I'm purely buying off a chart because it's healthy, and I want to exit when it becomes unhealthy. That's what I do with my long-term system.
So what you just explained there makes sense, you know, just for I think for the average viewer, because you know you used a lot of terminology in the last couple of conversations we've just had, which makes sense. You know, you're educated in this field, right? But for the average Joe and Joanne that are watching this show, how do you belay the fear factor? How do you deal with the emotions around trading? And you know, I've got a couple of thousand that you know I want to put it into the stock market, but what do I do? I'm scared. Should I do it? Should I not do it?
You shouldn't do it unless you know what you're doing, really.
then you need to show people how to do it. Yeah,
that's right. I mean, you can go and do it and learn the hard way, and maybe you get.
Well, that's
lucky,
what you did, didn't you?
Some people, that's right.
Yeah.
And you know, and I got lucky to start with, but I soon learnt the hard lessons, and I needed to learn those hard lessons to take me to where I am today. So, I'm always managing in the market all the time what my total open risk is, and I won't go beyond that. So I track and manage everything, and that's what.
But in other words, I guess the question I'm asking is, should people give it a go?
Well, basically, it comes down to personality. Some people just emotionally can't handle it.
True. That's true.
You know, because when you put your real money in the market, your emotions go up.
Yeah, because people paper trade and they make fortunes, but it's because there's no emotion.
The fear and greed come into it.
Fear and greed, that's what it's all about. Correct.
And so, when I talk about charts and trading off a chart, I'm trading people's greed and fear too. So when they start to become fearful, I want to get out of it. When they're selling out of it, I want to get out of it
Just
too.
a quick question, how long are those charts over? Because you talked about you're watching these healthy charts, but over what period of time is it?
Well, I probably look at least back over 10 years worth of a chart, if it's been on the stock market for that long, and I can actually see its history based on looking at a weekly chart of where it's been and where it currently is in those 4 market stages.
So there is a
So
rhythm.
if it's in that stage 2 uptrend right now, I'm happy to get involved and buy into it. If it's not and it's in a stage 4 downtrend, I'm not interested in being a buyer.
You won't even go in for a little one?
No.
No?
Short.
You want the big one.
Yeah.
You want the
I
big
will
one.
short sell and make money on the downside. That's a different strategy.
Yes, correct.
But if we're just talking about being a buyer, no, I won't be a buyer. Dick Smith was clearly unhealthy well before it's listed off the stock market. It started on the stock market and just went sideways, then bang, made the new low, and it was all over. So there was no health in Dick Smith.
As soon as it came out?
As soon as it came out, it went sideways. We'll bring up a chart, and you can see a chart of Dick Smith. So when it was listed, there's not a lot of history in Dick Smith. It wasn't on the stock market for that long.
How long was it?
I think it was only about 18 months or
was it more
It was gone and it came and gone.
But it started off, its highest price was where it started, and it stayed there for quite a period of time.
But some people paid some big money for it.
Yeah, in that consolidation. But once it broke to a new low, you can see it just free falled and doesn't exist.
That's
now.
it.
That's it.
Right.
So I don't want to be buying in anything that looks like that free fall like you're seeing in Dick Smith.
But how did you know that was going to happen? You were watching it over
the chart. I could see the new low in the chart. But my system won't give me a signal in that share. for me to get a signal
there's no
the share has
volatility.
to be healthy, has
Yeah.
to be
Oh,
making
okay.
new highs, has to be healthy.
Ah, okay.
That
yeah.
share wasn't healthy, it never came up on my radar to buy.
Ah.
And when I actually heard that it had financial trouble and I looked at the chart and I went, well, I can see
There
why
you
it never
go.
came up on my radar, because it's clearly unhealthy and there was no health in it.
Wow. So you got good health. Health charts.
Surely. Okay. So we've got about, 40 seconds to break.
Mm-hmm.
And, this show is all about, it's the Mortgage Busters and investment show now, so we can freely talk about, stocks and property, all that sort of stuff. But really, we want to pay off the mortgage in the principal home at least, pay it off as fast as possible.
Which was
But-
my goal too.
Correct, absolutely. But also to retire and retire well and happily.
And mine was to
healthily.
be a stay-at-home mum too.
Yeah, correct.
So that's what took me
So,
down that path.
we've got to go to a break. But the thing is, what advice or what encouragement would you give to viewers of this show to get into the market and help that?
It's a mindset thing. For me, Rich Dad, Poor Dad, I read that book and it completely changed my mindset. So you have to want to do it.
So it's innate.
Yeah.
Yeah. Okay. All right.
That's a
We're
good one.
back. We've got to go to a break. So you're watching the Mortgage Busters and Investment Show. We'll be back momentarily. You're back with the Mortgage Busters and Investment Show. Justine, you mentioned that Rich Dad, Poor Dad was influential for you.
Yeah, it's really that mindset and having that mindset of wanting to be rich and get out of the rat race.
It's
And
better to be rich than poor. Yeah,
That's right.
of course.
It sure,
It's
sure
easier.
helps.
like my uncle used to say, the money makes the money. Yeah.
And I was very determined. And I know I use some of these strategies on my kids. I mean, one thing I wished I had have done in my early days was have a 10% account. From the very age of 12, 10% of everything you earn goes into a bank account.
Why 12?
That you never, because that's when I started earning money.
Oh, sorry. Okay. Yeah. I was thinking
That
kids.
was last
yeah.
episode. And having that 10% account, and I have my children, whenever they get any sort of money or they have to earn money or birthday money or anything like that, they have to give me, I actually make them give me 20%, and we put that in a bank account and they're not allowed to touch it. And once it gets to a certain level, that's the investment. We will use that purely to invest, and that's only going to be used
That
to
is
invest.
sensational. What a great
Pretty
idea.
well planned.
Fantastic,
From
yeah.
12, did you say? And you're
No, I wish I had have done
Yeah, I
that
know,
when I
but
was
still,
12. But
12,
I'm
you're
just
thinking
talking
about it.
Rich Dad, Poor Dad's all about that mindset.
Nobody thinks of anything
of
at 12.
thinking
Yeah.
ahead, and if you want to be rich, you have to start thinking ahead. And I wanted to be get out of the rat race. I wanted to be able to stay at home with my children.
Yes,
so
having
I had
choices.
I had this determination. So in order to do that, I needed to
You got me
put my
motivated.
money.
I want to stay at home.
I need to put my money to work for me. I'm working for my money, but I need my money to work for me.
Correct.
So it was all about putting my money to work for me, and I had that start in the stock market, then I had that start with my first property, but I kept it going, and I've since invested in more properties, regularly investing in the markets all the time, even diversified into the US property market too. So there's been a whole journey for me of, if I have good opportunities and they're cash flow positive and they're going to create that income and my money's going to work hard for me, that's...
And life is good,
Yes.
as it should be. Of course.
I mean, I've had my struggles along the way. I wondered why I even wanted to trade the stock market after the World Trade Center crash in 2001. I remember curling up in a ball in the lounge, sobbing, thinking, what have I just done for the last year? I've achieved nothing. But I just came back more determined and basically looked at the mistakes that I had made, and if I'm going to do this again, what can I do differently?
Well, it's a journey. It really is.
But also, it's okay to make mistakes, and we're going to have failures, but what did you learn and what can you do differently?
Well, it's the same with any endeavour, really, isn't it? Yeah,
And not every investment I've been invested in has done well,
of course.
but sometimes you have to take risks to know things, but I don't put all my eggs in one basket and keep that diversification. I always know what percentage of money I have invested in different things at different times.
Great advice. Okay. Adrian.
So we've got a special.
A special.
A special.
All right.
So, the Smart Trading Plans book, which is worth about, what, $100 roughly?
All the books,
With all the
the
information,
book
yeah.
and the free bonuses that go along with it.
Which
so
is basically what you've been talking about
Yeah.
in this episode and last episode.
So creating a trading system, selecting the right trading tools, managing it all here, managing trading. So as a special for the new name, the TM,
The Mortgage Busters
the Mortgage
and Investment
Busters
Show.
and Investment
Yes.
Show, we are going to give away
25.
of these books.
25 books. Fantastic.
So whoever emails us,
Contacts?
contacts us, calls us, whoever's in the first 25 will get this free book. Gift from us, the Mortgage Busters and Investment Show, and Justine, of course.
Absolutely. And what a great way to get started in some sort of trading endeavour. So just final comments, and we've had this show and the last show. So what would you summarise this experience in terms of your trading endeavours and your, giving some advice in a nutshell to our viewers?
Well, I think that advice was that 10% account that I mentioned. Even if you start it now, I started it 5 years ago.
Because you can afford to lose that.
That's right.
Yeah.
But you don't touch that money and you purely use it for investing. So that is just money for investing. I mean, worst case scenario, if an emergency came up, it would be there. But the strategy in some of the books I've read, they talk about building up 6 months to a year's worth of your wage so that you are completely comfortable. If you are to lose your job tomorrow, you're not going to not have anything. You can survive for a while.
And that's a lot of people. They're living check to check, payment to payment.
And 10% isn't much.
No, but it adds up.
And you might be more determined and you might want to do 20%. And you can put that in an offset account against your mortgage to keep your mortgage down, but you don't touch that money for any other reason. But, a high yield savings account or a mortgage offset to start with, and then when it builds up to a certain level, you could invest it in different things, be that shares, or you might build up a deposit for your first property if you don't own a property yet.
And it's all about discipline as well. Do you love it? Do you love what you do?
Oh, I love it, yeah.
Is it your passion?
It is. I mean, I just love looking at charts, and I think it's the hunt for the next trade. It's just, I've got everything computerised and I can run a scan. It's like, okay, I'm looking for the next one to come along. Yeah. And it's that.
I'm getting excited.
And what a great educator you are as well. It's just fantastic. No, really, honestly, we've read your books and it all makes sense, and you talk from the heart, which is fantastic. Yeah.
And I don't go through charts in a lot of detail in that book because that book is written for people that want to trade fundamentally and other strategies as well. Yeah. So it's not all about charts. So if people want to know more about charts, I've got a Smart Charting 101 course, and that's a course to teach them how to read charts like we were talking about before, building them into understanding those 4 market stages.
Yeah. All right. The show has come to a close. Again, it happened so quickly. So thanks so much for coming
flying down
to us and flying down and spending time with us.
Yep.
And surely we'll chat again.
Yep.
Yeah,
great.
wonderful.
Look forward to it.
Thank you.
Thank you.
Next week.
So again, yes.
Yes.
Bust your mortgage. The report. We've got like 15 seconds.
Bust your mortgage.
Yeah. Get in touch with the show.
Yep. Get in touch with us on the website. We'll be down the screen. Our phone number 1300 TMB show, and get all your information all in one place and see what you can do in the future and get something in a cash positive. That's what we're always talking about.
Thanks again to Justine Pollard.
Thank you.
Thanks, Adrian.
There you go.
We'll see you again next week from the Mortgage Busters and Investment Show.